Good morning, everybody. Welcome to the Flow Show. We got to the end of the week, Friday, the 3rd of October? It must be 3rd of October. And I'm joined by a special guest. Well, I'm glad it's a special guest, otherwise I might have promoted the wrong person. Mike Brown is with us today. Don't know what's happened to Michael Brown, but Mike Brown's with us today. Good morning, Michael.
Very good morning to you, mate. Happy Friday. Not happy jobs day, because, of course, that date has been delayed, but happy Friday nonetheless.
Or has it?
Oh, don't you start, please.
Yeah, I'm going to throw that span in the works in a little bit.
Oh, no.
There's not too much on the news front, so I'm going to rush through that, and then we can talk about the football or something. All right, before I do, we have crossed over into the new month. So as you can see on the screen there, we've got our coming soon thing going on there if you want to find out what's going to be happening at Trade Analytics. So as I say, end of the month, September. So this newsletter that will be going out, we'll be picking a winner of a trading funding program account. That was what the prize that was in the draw for September. So that'll be happening this weekend, and we'll also be announcing some latest tidbits of what's going on at Trading Analytics. So if you haven't signed up for that, do get your name and email address in that. There you can find it on the forexanalytics.com/coming_soon. And we'll also have another prize, another draw for October. We haven't decided yet. Could be lunch with Mr. Brown. Who knows? If that's a good prize. That's a good prize, lunch with Mr. Brown. He probably won't pay for it, but
I was waiting for the dig there. I knew something was coming. I just couldn't quite work out what angle you were going for.
Yeah, I was trying to think of one as I was talking. So yeah, sign up there, and we'll have another draw in October. So get on to that one. Righty ho, let's get stuck into it. We've had Bank of Japan's Ueda talking. Now he's tried to do a bit of a pow. He's tried to talk both sides of the fence. He started off really with his usual cautiousness. If things align with their outlook, they'll look to hike, but there's still risks here, risks there, risks everywhere, including now the shutdown risk, which you may think, what's that got to do with Japan? Well, you've got to remember that Japan does have a lot of investment in the US. They have a lot of firms over there doing business. So if there is any big economic impact in the US in activity, Japan will face a bit of a brunt of it, mainly via corporate profits, which is something they keep a close eye on. So as much as they might be out the loop politically, it will have an impact should the shutdown go on for too long, and we do see some economic woes over there. So I suspected that warning would end up in BOJ messages some point, and it has, by the big man himself. But as I say, he was a bit usual, talking his usual cautious self, but the power aspect is that he's thrown a few comments out that have sort of countered that. So one of those comments was that the risk of them being behind the curve on inflation is not that big, but that it does warrant attention. So it's something that is in the back of their mind. They don't think they're behind the curve or the risk is low. The fact that they're talking about it, or he's talking about it, and that they're keeping an eye on it, is a potential hawkish shift, if you like. Well, in Japanese terms, it's a hawkish shift. He's also said that it would be too late to wait until all the hard data became available. He's talking about some of the numbers in Japan and potentially some of the numbers in the US, again suggesting that they may not need to wait for that data before they make a decision on monetary policy. It says we will scrutinise as much data as needed to make our policy decision. That includes not only hard data but also corporate surveys. He says the risk of delay in US data from a government shutdown is serious, but we can extract information from other similar data. It says the uncertainty has receded after the US-Japan trade deal. It says we want to get closer to our price target in the second half of the term. Talk about the second half of the year, their fiscal year, which we've just crossed over. So although he's cautious, he's also given some reasons why they might look through some of that caution to carry on hiking. So I think I'm 50-50 on whether they go in October. But I do think we're live for potentially one of the next, I would say, 3 meetings. What are your thoughts on that, Mr. Brown?
Well, I was going to say you're 50-50. The market's 50-50 as well, looking at where swaps sit at the moment. It's an interesting one because the remarks, as you just went through them, it's almost sort of give the Hawks with one hand and then take it away with the next, with the very next headline that he made. I think the market was probably looking for more, which is why you saw the yen soften overnight, albeit we're trading back to pretty much flat on the day now. Obviously, we'd had some of those hawkish speakers earlier in the week, and I think the market was really kind of going. I think you made this point in the chat room yourself. You know, the market's kind of it's all setting up for you either to come in and be the sort of final confirmation that October's when they're going to move, and that just didn't quite happen. I do wonder whether this is classic BOJ. They're always going to find an excuse not to do something, and they just keep kicking the can down the road and eventually end up missing the window or the opportune window to actually deliver that rate hike. But I guess only time will tell on that front.
Yeah, I think with a month to go, you know, I think that it's on the cards, but I think they'll want to see the next round of data, maybe, that to make sure it's not falling off a cliff or anything like that. But yeah, it's typical Japanese, typical BOJ. They just take these small inch steps towards doing something, but give it 2 weeks and we'll be getting all the sources pieces anyway, and that will confirm or deny whether we're getting a hike or not. But yeah, I think the next 3 meetings are probably really live. I mean, if they haven't hiked by March, then they probably never will hike again. But who knows? We'll have to wait and see.
Yeah, and of course the other thing with Japan is the LDP leadership over the weekend.
Yeah,
that's probably the biggest story, really, isn't it?
Yeah, though, even though he remarked about that as well, saying that they'd look through that, it's not necessarily something that would change their minds or the decision. So yeah, who knows? We'll wait and see who it is. And we've got that coming up this weekend as well. Right, over to the data, and we've had a ton of PMIs out, all the services stuff coming out. Let's start in Aussie land. They're manufacturing and services. Look at that double bubble. Went up to 52.4 in services. I'm just going to ignore that one and stick with that one. Well, that'll be their composite one, if you like. So services went up to 52.4. Well, I say up, it beat expectations, but it was down on last month's 55.8. And that's a bit of a theme we've seen throughout some of these numbers. Japan, that did see a rise 2 pips to 53.3. Then we come into Europe. Decent number there for Sweden and France. Spain, they saw an increase as well, 54.3, so a whole point above expectations and a big gain on last month. Italy, they saw a gain as well, 52.5, the southern states outpacing their northern rivals.
Pigs are flying these days.
This what?
I said the pigs are flying these days.
Yes, the pigs, the good old pigs are flying here. Even Greece. Is Greece on there today? We'll have a look at that. I don't know if it is. They had a good one the other day. But anyway, France went backwards for a change, 48.5, worse than the flash number, 48.9. Germany as well, that big jump to 52.5 in the flash was too good to be believed when we pulled back to 51.5. Still an expansion, so that's good news at least. Now, 3 things of note from those PMIs. Both France and Italy have seen discounting by firms on prices charged, trying to encourage business. This is something I've been keeping a beady eye on for a while. So now that's France and Italy seeing firms cutting prices to attract business. Something you've got to watch over the months ahead. Germany are the polar opposite. They're seeing increased in both prices paid and prices charged. So they're still facing that problem, even with that weaker activity, should we say, generally in the economy. The pan-Eurozone number pretty much reflecting what we've seen, 51.3, a pip lower than the flash, but up on last month. The UK, another one going backwards. We saw a drop to 51.9 in the flash. That got worse to 50.8 in those numbers there. Again, the BOE in a bit of a pickle. We're seeing faster unemployment and stronger price pressures. So that rock and hard place just got rockier and hardier. Any thoughts on those PMIs, Michael? Not too much to move prices, but we keep an eye on the trends anyway.
Yeah, I mean, certainly, I don't think the Eurozone data is worth bothering with too much. I mean, it's all close enough to the flash estimates not to worry about. Although it does suggest the ECB don't need to do anything else, but I'm very much talking my own book on that one. The UK data is interesting. The flash PMIs have clearly been revised considerably lower there. I wonder whether that's the first signs of some of the pre-budget nerves and angst starting to creep in. I haven't actually looked at the survey periods, but for those who are unaware, the flash PMIs are normally about 75-80% of the responses. Then the final data comes in between usually the sort of second to last week of the month and the very end of the month. And that's obviously when we've had the budget date confirmed, all these sort of trial balloons around potential tax increases have started to do the rounds. And I just worry that that is sort of a sign of what's to come in October, November, and then maybe even after the budget in December, because you've now just got basically 2 months, 2.5 months of uncertainty around what the hell's going to happen on the fiscal side of things at the end of November. And that's just going to act as a really stiff headwind and a handbrake effectively to business investment, consumer spending, et cetera, as we move into what's now Q4. So doesn't really tell us anything new about the UK economic outlook, because we know that's pretty dour and pretty downbeat, but it's certainly not a positive sign, to say the least.
No, exactly, and that was shown in the comment on that PMI, saying that clients had deferred spending decisions until after the autumn budget, while households were also hesitant about major purchases. So it looks like we're in the thick of the budget effect.
And that line there, 12 months of falling employment now.
Yeah, exactly. So that's not the budget, most certainly. So yeah, I'm still happy to be short the quid on all that, but the budget's going to be a bit of a crunch point as to what we do from there. Do you think there's any way Reeves can pull a rabbit out the hat?
No. I mean, that's clearly her plan. In all seriousness, that is clearly her plan. That basically the strategy is something will hopefully turn up. And the reason I say that is because she has left the budget to the latest possible date, basically in the hope that market rates fall or growth magically comes from somewhere. But that's not a strategy. That's not a way to run the economy. Let's be completely honest. So yeah, I really don't. I think if anything, things will actually, because today is when the OBR submit their first forecast round. I think if anything, they do 6 rounds between now and the final round in late November. The risk is that things actually get worse because markets get even more jittery, gilt yields rise even further, the productivity downgrade kicks in, et cetera. I actually think this whole let's hope for a miracle thing could turn into a bit of a nightmare, really.
Yeah, I think so. I still think we could be in for a bit of sell rumour by facto if things might still be crap, but they might not be as crap as the market thinks. So that's a risk for the quid. Is there a time on that OBR, or is it just whenever they decide to finish?
Well, it's technically a private communication between the OBR and the Treasury. So basically, look at the newspapers tomorrow morning, and someone will have leaked it.
Okay, yeah, because if it's crap, you're not going to get Reeves shouting it out from the rooftops.
No.
Someone will have it somewhere. We'll keep an eye on that. Right. The only last thing was Eurozone PPI data, which came in a bit soft on the month, more than expected, and negative numbers seen again from positive numbers last month. So it's something just to feed into the inflation picture, which we have seen inflation ticking up a bit this week in the Eurozone numbers, Germany and elsewhere. ECB's Kazakhs says rates can stay where they are if there's no further shocks, and the uncertainty remains very high.
Good man.
Yeah, good man. We've also had Ollie Ren is not Ren, not is it not or Ren? Who was it who left and the Guards just promoted to
That was Klaus Knott.
Knott, yes, Mr. Knotters. He's finishing his term at wherever he is, and Lagarde has pumped him for the top job at the ECB. Kiss of death, like you said, mate.
Well, also that one really surprises me because I can't imagine. Well, Lagarde endorsing him basically puts the kibosh on his chances anyway. But I can't imagine that he would have actually carried much support among Eurozone member states, because if you think back to when Knott was actually sat on the governing council, he was reliably one of, if not the most hawkish member on there. So I just don't really see how there's ever going to be support within Europe to give him the top job. Actually, you mentioned Ollie Rehn. He seems to be the sort of front runner to replace Lagarde as and when she leaves. When's her term up? Is it 2027?
Oh, hope so.
Well, she might be off to the that lot in Davos, the World Economic Foundation first.
Oh yeah. Sooner rather than later, hopefully. I'll wait for her reign of terror to be over.
Keep everything crossed.
Yeah. Anyway, before we get into that saga, only a bit of data out yesterday was Challenger layoffs, which the second piece of private jobs data we get, and there was shenanigans with that as well, because it dropped about an hour and 20 minutes earlier than it should have done, which my good friend Mr. Michael Brown managed to cop off someone on Twitter. So
yeah, it's a bugger that thing's not market moving, really.
Oh yeah. I would have loved to have had that an hour and 20 minutes early on a big number, but yeah, we can but wait. Anyway, job cuts came in less than last month at 54,000. The story within that, or the summary within that, was that firms are still in a low hiring, low firing scenario, but one aspect, the retail side, is Challenger note that this is the period when we should start to see strong, or the start of, holiday hiring, and that's not been seen as yet. So it may be something that we need to keep an eye out, whether this caution is going to feed through into the holiday season, both in hiring and spending. We did get something that most people don't even look at, the Chicago Fed labour index, and there's a real-time unemployment rate forecast within that came in at 4.34% versus 4.32 in August.
Whoa!
Whoa.
Who's the geeky nerd doing it to multiple decimal places now?
You can have two decimal places on an unemployment rate. I'm just reading the numbers, mate. I don't write the report. I can go and see if they do three decimal places, if that floats your boat. I know you like to dig there. Anyway, this is the sort of crap data that people are going to focus on if this shutdown drags on. And it was up from 4.09% year on year, or last year. So creeping unemployment according to the Chicago Fed. So I mean, that's a fair point that the regional banks are still going to be producing their bits and pieces of data. So that's probably something we've got to keep our eyes open the longer this goes on, Michael.
Yeah, I think so. I mean, I question the extent to which things like that can be market moving. I don't know about you, but I'd not actually ever heard of the Chicago Fed unemployment rate model estimate, or whatever they call it, until about 4 o'clock yesterday when I started going through some emails. But I think maybe that's just because I'm asleep at the wheel. Who knows? What I would say, though, is I think it just reinforces the point that I think we made on earlier in the week, maybe, that I don't think this shutdown is going to impact the monetary policy outlook too much. It might mean that, from a market perspective, there's less vol, because we're not sat here going, oh my word, we've got NFP in 2.5 hours time. But from a policy perspective, officials on the FOMC can sit there and sort of comfortably have enough of an idea of what's going on in the labour market. There are enough other alternative indicators that probably won't derail them from delivering the easing that markets have priced. I think that sort of path of least regret for the Fed is still towards delivering certainly an October cut, and probably a December one as well. And also there's the point that actually by the end of October you probably have the September jobs report anyway.
Yeah, we hope. Let's see. Right, moving on to Fed heads. We've had Fed's Logan says inflation is running above target and trending higher. The recent cut was insurance against more rapid non-linear decline in the labour market. Policy isn't more than modestly restrictive, which is appropriate. We must be very cautious about cuts. And she warns against easing too much, only to have to reverse course. So very much in the hawkish camp there. Fed's Gall's beast. He's trying to speak every day this week. I think he has spoken every day this week. He's probably
He's been paid by the word, I think, at this point.
Oh, I don't think he's on the list, but he'll probably pop up somewhere. Anyway, he says without the official.
Oh, he is. He's on CNBC at 1:30.
There you go. He's done the week. He's done the week. He is the new Bullard and cash and carry. Anyway, he says without the official unemployment rate, the Fed will make a decision with the info it has. Just exactly what Michael's just said. Mr. Trump has had a meeting with Russ Volt yesterday. He's the guy who is in, I can't remember what he's in charge of. He's in charge of something.
The OMB.
That's it, the OMB. And apparently they will determine which Democrat agencies he recommends they cut and whether those cuts will be temporary or permanent. So that might happen today. We get a number on how many jobs are going to be gone in this furlough, in this shutdown. Hopefully we get it today because I can't be asked to wait any longer.
Do you
go on?
Sorry to interrupt you on your own show, mate. Do you think that's a big deal, or do you think it's just a bargaining chip and a bit of sort of political posturing going, essentially to the Democrats, if you don't agree to this within a week or so, then we're going to get rid of all your pet projects? Because I'm kind of coming down in the latter camp at this point, I think.
Yeah, you never know with Trump. He could turn around today and say, "Oh, we've had a chat. We're going to cut 300,000 people," but then. Is that going to cut them now, or going to cut them, like you say, in a week's time if the Dems don't fold? I think it's all up in the air. I think he would like to cut that amount of people or a large swathe of those government jobs because like most governments, it's bloated. But whether it's a threat or whether he goes ahead of it didn't stop him earlier this year from cutting all those jobs, even though it's still going to court cases and whatnot on everything else. So yeah, I'm not sure. I'm on my foot in either camp. We could either just do it now and face the consequences later, or use it as a bargaining chip. But what we do know is there's not going to be any votes over the weekend, as has been confirmed by Senate Majority Leader Thune, however you want to call it. So it's unlikely they will have votes over the weekend. So it could be the early part of next week before they can actually look to do something official in the Senate. In the meantime, Trump's got half an eye on the midterms, looking ahead to next year. He's apparently looking to target up to 30 industries and dozens of companies for deals ahead of those midterms. He wants to get things firing up there. He's also thinking about offering $1,000 to $2,000 taxpayer rebates, which will be funded by the tariff revenue, which is something he's spoken about before. So again, probably one eye on those midterms, chuck a bit of cash around, sweeten people up a bit. Do you see
one eye on the CPI metrics on the back of that as well?
Yeah, and retail sales. I remember what happened the last time. Was it over COVID when they handed out a load of dosh, and we saw strong retail sales and the like?
Yeah. Well, and we also actually saw the whole meme stock thing kick off again because it was during COVID, at least the first round of stimulus checks, and the long and the short of it was people couldn't go to the shop and spend, and they couldn't bet on sports, so they decided to bet on financial markets instead. But it's interesting you raise the midterms, because I think one of the things that I've been sort of talking about recently is this idea that as we sort of get closer to the start of next year, and certainly into the start of next year, you almost end up with a quote unquote Trump put for the economy, because the absolute last thing he's going to need going into those midterms next November is a recession or a loss of economic momentum. So yeah, you've got to imagine that Trump and Treasury are kind of going to do everything they can to keep juicing things along at least until they've resecured the House and Senate.
Yeah, absolutely agree with that. Well, if anything, if he does drop $2,000 checks in everyone, it's probably time to go long Bitcoin. Keep an eye on that. There's a bit of a play. Who knows? Treasury Secretary Besant was out and about waffling as well, talking about the Fed interviews, saying that they went over the halfway point in those interviews and expects the first round of Fed chair interviews to be completed next week. He'll then present Trump with 3 to 5 strong candidates. Also, the next round of China talks should show a big breakthrough because the current China trade truce expires on the 10th of November. Our mate Zavos, is he in the frame, Michael?
Of course he's in the frame, mate. Of course he's in the frame.
Yes.
I mean, personally, I wouldn't hold my breath on either of those. Certainly not on the idea that there's going to be some sort of miraculous breakthrough in terms of US-China talks. But yeah, the Fed chair thing is kind of anyone's guess, isn't it, at this point, to be completely serious. I mean, I did say back in, I think it was April, that, I'd have a cheeky fiver on Zervos being in the running. And I'm very glad to see he is, purely because I might win a bet for once. But yeah, it's anyone's guess, really. The only thing we do know is that Trump basically values kind of loyalty to him as number one, and then the desire to lower rates as much as possible as number two. I think all the people, all the interviewees, all the candidates know that as well. And if they want the gig, they're going to sing from that hymn sheet. So it's just down to who Besant likes the most, I guess, in this sort of apprentice style popularity contest.
Yeah, and it's potentially a big injection of uncertainty when we get the announcement of who it's going to be, because then does the market, sort of start ignoring Powell and listening more to what the new guy is going to be up to? Is Powell going to become a bit irrelevant in the latter part of his tenure? So yeah, I think it's something we need.
There's an argument he already is.
Well, yeah, but he's still in the hot seat. I mean, he's still moving markets, and the market's still listening closely. But when it knows who the new guy is and gets an idea of his or her slant, that more makes Powell a bit irrelevant.
True. Although having just to play devil's advocate slightly with you, mate, because I know you enjoy that. We know what's happening. We basically know October and December are 25 basis point cuts.
Yeah.
Realistically, you could argue that Powell only has 2 live meetings, or maybe 3 live meetings next in Jan, March, and April next year. But we're going to know who the new Fed chair is at those meetings anyway. And there's actually the possibility that new Fed chair could be sat on the board in those meetings if they end up slotting in and taking over from Stephen Myron. So, there is a case that Jay is yesterday's man, as much as it pains me to say that, because I think he's done a bloody good job.
Yeah, well, he's recovered. He's recovered from a very bad job. Let's put it that way. Isn't it March that he's off?
Excuse me, I was having a sip of a drink. No, May, end of May.
Is it? Okay. Well, I knew it began with M, so I was half right. Yeah, but you're right. He's done a fair job now. We can go back and argue the job he did 2021, 2022.
We best not. I've got a lunch to get to. We'll be here all day.
Water under the bridge. I would dare keep you from your lunch, mate. I'm surprised you actually agreed to come on and weren't already out the door. Anyway, so we were talking about the NFP, whether it's going to happen or not. It's 99.99% certain it's not going to happen. But CNN decided to drop a bit of a cat amongst the pigeons last night, and a story that Elizabeth Warren has told Trump that he should release the data because, according to former BLS employees and a former commissioner, the data is there already compiled, and all it needs is someone to push the button on it. Now, this commissioner added the caveat that the data could be published should the agency reopen, which is hardly likely. But I don't know. Do you think Trump could see the numbers, and if it's a good one, it'd get them to release it? What might happen?
No, in short, I think this is very, very transparently Senator Warren trying to score a few political points, and basically, trying to frame this shutdown as a GOP issue as opposed to being a Democrat issue. The one takeaway I would have from this, though, is it does kind of reinforce the idea that we can draw parallels from the shutdown in 2013. And what I mean by that is, in 2013, the jobs report was delayed, and then it was released 3 days after government funding resumed, because it had already been collated and it was ready to go. So I think
Yeah.
the implication of this for me is that you can kind of realistically go, when the government does reopen, which it will at some point, we should get the jobs data in relatively short order, because it's basically ready to go. You just need someone to release it. They're not going to release it in a shutdown when there is, if you read all of the contingency plans, genuinely one employee at the BLS at this moment in time. You would not want to be that man or that lady if you released the data today and things went wrong.
That'd be funny. We have seen worse things happen. I mean, look at the ADP and what happened. But yeah, so it's 99.99995% certain we're not going to get it. But it'll be funny if it does drop and no one's ready for it. So I will.
That's not the word I would use.
No, I will be keeping my eye on the calendar just in case. Stranger things have happened. Right, but apart from that, what we will be getting is the ISM services number, which is probably going to be the biggest thing to watch today, because it obviously is the biggest sector in the US. So again, probably ignore to a point what the headline number does. We're expecting a minor pullback to 51.8. It'll be employment and prices that are going to take the market's attention. So even if this one is a crazy beat, 55 or 56 or whatever, if employment is down a chunk and if prices are down a chunk, that's going to be what the market trades. The manufacturing numbers were a bit of a meh, as we talked about, but this one could be more market moving, but it's going to need a big variation. Anything around the prior numbers, a couple of pips here and there is not going to make a blind bit of difference. But if there is a big variation in these numbers, we're going to get some market moves. This factory orders and durables revisions, we won't get those, so forget about that. You got any thoughts from this PMI, mate?
Well, I won't be here.
Okay, moving on then.
But no, I think that basically what you can say about the PMI numbers is kind of what you can say about all US data at the moment. The releases we are getting, the market is naturally going to be more sensitive to them, because probably half, if not more, of the usual numbers we would get, we're simply just not seeing at the moment. And yeah, it's all a case of does it confirm the broad trends that we expect, which is that price pressures continue to bubble away largely as a result of tariffs, although not necessarily in the services sector, and that the employment backdrop continues to be one of very, very slow hiring, but also very, very slow firing and layoffs as well. It's a question of, does it confirm that? If it does, the market's going to be very much a case of, as you were, we're still set for that rate cut at the end of the month. If it throws a bit of a spanner in the works, then you could potentially see a little bit more of a reaction than you otherwise would expect to.
Yeah, and as we saw with the manufacturing data, tariffs are still, the buzzword amongst respondents. Is probably going to be the same in this lot, and then next month shutdown will be the buzzword as well as tariffs. That's not exactly a big revelation call I'm making there, but we'll be ready
really
for
sticking your neck on the line, mate.
Yeah, I know. Yeah, biggest call of the year. But yeah, it's just, we know it's going to happen, so be ready for it. Right, I'm going to leave Michael now to go through the price charts while I go and get myself a coffee.
Oh, thanks, mate. Right, we'll end the show there. Thanks, guys.
Because I know you want to talk about my Batman formation here on gold.
Oh, no. Oh, no. I knew there was an ulterior motive for you dragging me in here this morning.
Yeah, exactly. No, we were going to start at gold purely because that's the chart my screen has been sitting on. Have a quick look at that. So, as I mentioned in the chat room, I've upgraded this line to a white one, just because it might have a bit more involvement in the price action now, because we had this little look underneath. 3 times we tried to have a look under there and we couldn't hold it, and we got back above, and then we just got a little bit of support coming in ahead of it. So we are keeping this uptrend, but we've got a bit more balance now, going a bit sideways. This level here, 38, 72, 73, that's, I think, is going to be pretty important, because if we're getting above there, we're going to probably go and test these highs, which will be another strong test on its own. If we get a third hold there, If you've been looking at shorts, that's the sort of price action you want to be looking at, because then you are defining your risk strongly against a level. But if we hold here, 38, 72, 73, that's got the potential to then see us dipping back down, maybe through there, maybe even as back down as the 38 figure or down to that level there. So some of these smaller levels still in play. This one I've just dropped in today purely because that's where the low was yesterday. We have had a bit of price action around there. Whether it becomes something or not remains to be seen. So here you've got you're beginning to get some clear levels showing up that might be might have a bit more conviction trading against. Just for some of the others, dollar yen, as we said, that had a bit of a run up. Now we've had this step down pattern going on since the 150s, but this is a potential game changer, at least for the short term, because we couldn't make a new low yesterday after that low. I mean, when we were down here, I thought this was looking crappy and we were going to begin all the way down to maybe 146, but it staged a very decent bounce. But has that changed this trend? Not quite, because we've got this series of lower highs and we've got another one in place potentially here with this move. So what do we do here? We know the range. It's now this high down to these lows down here. That's probably what you want to be concentrating on today. If we go and make a new low below that, even by a few pips, maybe down to the 50, that's going to keep this trend in play. But we are bouncing from here. This is probably the key level on the top side. Take out that lower high, and then we might be turning around that trend from the 150s. So set your ranges for this one. You know where the top is, you know where the low is of the day, and then look at your ranges outside of that down to those 60s again. Dollar CAD, I got my break trade on yesterday in this move here. Had a little snip off both of my positions in that move. We are holding the break. That's encouraging. What's not encouraging is that we're not bouncing too far from that break point. So we might be just having a little bit of wait and see Friday, get that data out, see what's going on before making a move. I think where we close is going to be pretty important. If we're closed above this level, it will look good, but not massively good. If we close above this level, then it's going to look far stronger, and we're probably going to be knocking around the 140s. Just to highlight this level, it's probably going to look a bit messy. This is just a level that goes all the way back. We've had lots of action up here, lots of action around it, but it goes all the way back to here, this October 2022 high, which was a pretty significant high at that point, and it even goes back further than that. Price action in there, so that's why I've got it on the chart.
Lines on there, mate.
Oh, I love my lines. You know me, I love my lines. But I like. I'm just showing this one because I might not have it on that one. Yeah, that's my clean chart, and I haven't got it on that one. So yeah, tough. You have to look at all the other lines on this one. Anyway, that's a significant level up top. We got above it yesterday. We couldn't hold above it yesterday, and then we had resistance at it straight after. So again, we're in a pretty tight range. It can't sit in this for long. And if we are breaking down, we're probably going to be messing with this zone. This 139.30s, which I said, if it held yesterday, could be the springboard for a break up. That's going to be equally as important if we come back down again. Euro sterling, this 87.20 is becoming a bit of a washout at the moment. So we probably need to set our attention a bit wider, ignore this level for a bit because we are having a bit of messing around. Look at the wider range. This level confirmed down here. We were speaking about it earlier this week. We got that confirmation that this was holding up, 87, 86, 90s. And we know where the top is here at the 52s, which is still looking like a potentially strong double top. So forget this number in the middle now for a while. What you want to see is it price moving significantly away from it and then coming down and seeing what it does then. Otherwise, we could have this waffle up and down. So 86, 90, 85, 50s, 60s is the range for this one. Oh, Brian, we've already had that joke as a Robin formation. Oh, I don't know. Boys and girls, if you've got anything you want me to look at, then let me know. Otherwise, I'm just going to waffle on my own book talking, such as Dollar Mex held the range yesterday up the top. I did jump into a short in the 49s up there, which I'm already sliced down here to the 40s. This one's happy to come back into the middle of the range after these little moves. So we're not ready to bust a move either way. But as much as it's not doing much in the middle, what these increased tests of these range edges does, it builds up the probability that when you do get a break, it's going to be a significant one. So I'm already eyeing up potential break trades if we go one way or another. Because if we get another nudge through the 1850, that could be the one that then kicks on. So it's good for a bit of range playing at the moment. I know Blake's been on the other side buying the dips. I've been on this side selling the rallies into the top. But if we do get a move either way, that's going to be the one that probably has legs. So if you don't want to do anything here, at least plan for the breaks in those. What are you up to, Ali? Oh, you've been sitting in that Euro Swiss all week. What are you short at? 45. And what are you waiting for? Your 05, 95 area. I don't know what to say about this one, mate. Are you going to keep it over the weekend with any risk headlines potentially dropping? Not that this might move much. I don't know what you're going to do with this one, mate, because it's not doing an awful lot here. And you're a bit stuck in the middle, perhaps. I've not... you've booked 120 pips on the resistance. Okay, well, fair enough. Can't argue with that. 120 pips. Oh, you were short from further up, I think. Can't remember. Anything else, boys and girls? Michael, you got any? Is there any assets you're looking at in particular? Anything you want to comment on?
Well, pipe prices in the square mile.
Oh, they'll be going up in the budget, I assume.
Well, nearly £8 now, worryingly. What I was going to just pick up on your point about the weekend, because I make a habit of saying this every Friday, but I think this weekend more than most, there is the potential for some fairly chunky gaps to open up on Sunday night. Obviously, you've got the government shutdown in the US. Not only are we looking at news as you mentioned earlier around these firing threats, but also is there any sort of progress made in these talks over the weekend to actually potentially get the government reopened, or at least get another continuing resolution vote in the Senate or in the House? The other thing just to bear in mind for anyone with exposure to commodities, mainly oil or any commodity currencies, is of course there is an OPEC Plus meeting on Sunday. There were some sources doing the rounds in the week that they might be looking at an output hike of 500,000 barrels per day. They came out and actually denied those reports, which suggests they weren't overly happy with the market reaction to it. But you would be expecting an output hike of at least 137,000 barrels, which was what they delivered at the last meeting, if not more. And obviously that presents a little bit of gapping risk in crude benchmarks on Sunday night, Monday morning as well. So yeah, anyone with weekend exposures or planning weekend exposures, it's probably worth taking a fair bit of care on that front.
Yeah, well said, mate. That oil will be interesting because we've obviously got those expectations for 500, whatever it was. And if they do less, we're probably going to see a bit of an upside move in oil, despite the fact that they are increasing production. But it's like I always say, know what the market is doing going in, and the market's going into this a little bit bearish. So the risk is that they don't get anything as bearish as what they're expecting, and then we'll see a reaction the other way. But we could be on for a bit of a break if the number is bigger, because things are looking decidedly dodgy under this 62 area that we've messed around previously, long-term level, and now we're moving back below it. We have been below it before. We've had these little moves, but it hasn't lasted that long before getting back above.
Oh, sorry, I was going to say, it does feel like it would be tough for them to go bigger than the market's expecting when you throw out 500,000 barrels per day.
Yeah.
But then, and do that for 3 months running. But, never say never with OPEC. It's anyone's guess.
Yeah, very much so. Very much so. And obviously, we've got the yen stuff going on. The election.
Totally forgot about that.
Yeah, it's easy to do, mate. Easy to do. So yeah, if you've got any yen exposure going into the weekend, you want to be careful with that. If you can lock in your stops, but you face some gap risk. Alternatively, you can always close up and reopen on Monday if nothing's changed. I'd rather do that than hold on to a trade that might blow up, because it really is just a gamble as to what happens. It looks like it's going to be a runoff between Koizumi and Takaichi. And if the members' polls are to be believed, Koizumi should get it. The supporters want Takaichi, but the members want Koizumi. So we'll have to wait and see. Koizumi would be the most yen positive announcement that we get. And Takaichi, if she wins, I think that's going to catch the market on the hop, which could mean dollar yen. I would go so far to say we could potentially get another run up to 150 if that's the case of her winning. So yeah, I think Koizumi, we might see 146. I wouldn't suggest we'd see a huge move on that. But yeah, I think the bigger price risk is to the upside if she gets it. Right. Well, I've had enough. I know you've had enough. You're probably looking at your food menu. Where are you going today?
I'm actually not in the city. I'm heading over to meet the dwarf at his usual haunt.
Ah, right. You better take some cigars with you then.
Well, I need to take an umbrella with me as well, looking out the window.
Well, enjoy your lunch, mate. And thank you very much for coming on the show. Always a pleasure.
No, my pleasure. Thanks for having me.
Yeah, no, cool. And I might get you on in a week's time or something. I know Kay's off again next week. So we'll look at other data that we haven't received due to the shutdown.
We just play a tape version of this show. I don't think much will have changed.
No, I doubt it too. But anyway, thank you very much, mate. And thank you to all our viewers for coming to the Flow Show this week. And trade safe. Be careful over the weekend. And we'll see you all on Monday. Have a great weekend, everybody.
Yeah, have a good one, guys. See you later.
Cheers, mate.